Hi there, welcome to Kneppy Invest and welcome to May 12, 2025. Time is currently 4:18 p.m. So market has just closed for the day. Closed about 8 minutes ago on a really interesting day. And I'll talk about why today has been interesting in a second or so. When I say second, I probably mean a minute. Now, before I talk about why today has been interesting, also talk about the agenda. I did record another video just before the ASX Daily Rundown video. It was an article reaction video, and this is the article I reacted to. It's also a video. You can watch it on YouTube, but it's a LiveWise buy, hold, sell article, hunting for quality in ASX small and mid caps and 4 cracking picks. Now, I have separated this reaction video into 2 parts. I've recorded the first part. I'll record the second part tomorrow. The reason I've separated it into 2 parts is the main motivation, main inspiration for me doing this article reaction video is because in this article, the 2 experts, Will Granger from Airlie Funds Management and Mark Whitaker from IML, were asked to define the term quality when it comes to companies. And I do think that's really interesting because in my opinion, we all have to define the word quality ourselves. We can use inspiration from other people, other sources, but it's very important that we define the word quality ourselves. Don't rely on other people. And how Will Granger and Mark Whitaker define quality, I did think was interesting. And tomorrow, I'll release that particular part of the video tonight, and that's on May 12, and I'll release the second part on May 13 evening in relation to the 4 cracking picks. Now, I do have a bit of disagreement with their choices here, and I'll probably have to put the word cracking in quotations because I'm not sure if these 4 picks could be considered cracking. Anyway, so look out for those 2 videos on the evening of May 12 and 13. Now on to why today has been interesting, particularly if you have one particular word in your company's name. Now, before I started recording, actually just after I finished recording the reaction video, I came back to have a look to try to find some inspiration in terms of the top 5 stocks of the day, because I'll be honest with you, when it came to announcements this morning, not much to choose from. So I was just looking for some inspiration, and a really good way to get some inspiration is just have a look at some of the top gainers and top losers. So I did find one company in the top gainers that I did include in the top 5 stocks of the day. By the way, I did not talk about the agenda for today's video. I think I can skip that, because it's always the same. Anyway, so I did find a bit of inspiration when it comes to the top gainers, but when I got to the top losers by market cap, there was an obvious theme at the top here. It was an obvious theme you just could not ignore, because look at the names of the top 4 losers here. Telix Pharmaceuticals, Neuron Pharmaceuticals, Botanix Pharmaceuticals, Clarity Pharmaceuticals. What do all these 4 companies have in common? Well, it's found in the last name of these companies' name, last word of this company's name, Pharmaceuticals. And it's not coincidental that the share price of all these 4 companies are down between almost 9% and 13%. And the reason why the share price of all these 4 companies have dropped like a rock is, or was, easily found. It didn't take much time for me to find the reason. It's posts by Trump on Truth Social in regards to drug prices and executive order. And I might be a little bit controversial here by saying I don't disagree with him. In fact, I think what he's doing or trying to do is a good thing. Whether he succeeds is another question, but I think this is one of the good policies or one of the good executive orders he is doing right now. Anyway, so I decided in the end, because this was the most interesting thing on the market today, that the companies coming in at number 1 will be pharmaceuticals companies, because this is by far the most interesting thing on the ASX today. Anyway, so let's have a look at the ASX today. And there's another reason why today's been a little bit interesting, not overly interesting, but at one point this morning, about 11 a.m., the XJO was up about 0.5%. So I thought, oh, we're going to see a pretty good rally today. And the reason I said that is because if you have a look at American futures, NASDAQ is currently up 2.1%, Dow Jones is up 1%. And I thought that was going to translate to the market. And it seems like it was translating to our market in the morning. And the reason why the American futures are rallying is because of optimism in regards to a potential USA and China trade deal. Now, I think the market might be being a little bit too optimistic, but it might happen. And if it does happen, and I think they are being too optimistic, I don't think the market's going to run all too much higher from here. But on the off chance that there is no deal within the next, say, 2 or 3 weeks, I do think there is a very high chance that you're going to see significant weakness in the market the longer no deal is being announced or will be announced. So I can see this going either way. But I still think there is definitely an argument the market is being a little bit too optimistic right now. Okay, so that is why, actually, that's not the reason why. I was going to say that's why we had a good day today. But for some reason, during most of today, we saw the XJO and XAO fall. You can just see that in this chart. Yeah, reached a high at about 11 a.m. So I did have a look at the XJO at about that time. Tech went sideways all through the day. So a bit of weakness in our market today during the day. Not sure what has caused that. Maybe it's because of pharmaceuticals. I doubt it though. Anyway, best performing sectors, no surprise here. Energy and mining's had a good day, except gold. Gold did not have a good day. In fact, gold indice is down 3.18%. Iron ore had a good day. Definitely iron ore had a good day. I think oil had a good day, that sort of thing. So energy up, pretty good. Materials up, industrials, IT, and real estate all up a little bit. And on the flip side, a pretty bad day for healthcare, which is not a surprise. Pretty bad day for staples and utilities as well, which is interesting. I won't have a look at that. And when it comes to the ASX 20, up 0.25%. Now, that's interesting because banks are down 0.35%. Mining's had a good day. So I'm assuming right now that BHP is up, Fortescue is up, Rio Tinto's up, Woodside's up. Now, one of the reasons why banks might be down is because NAB or ANZ went ex-dividend. And they both reported last week. And if they reported last week, there's a chance they went ex-dividend. So, ANZ's going ex-dividend tomorrow. And in fact, the share price is up, which means NAB might have gone ex-dividend today. Yeah, I think they would have. Yeah, ex-dividend today. So that's why the share price of that company is down, which does distort the indice performance. If a company like that does go ex-dividend, a big company like that does go ex-dividend, it's going to put a little bit of downward pressure on the market and the indices. So that's why banks are down. And it wouldn't be surprising to see the other 3 banks' share price up. So CBA up, we already know ANZ is up, and maybe Westpac is up as well. So let's have a look at the ASX 20. Up 0.25%. So I'm assuming mining's up. And what was down today? Healthcare. So CSL's down. What else? What other healthcare companies are in the top 20? I can't remember. So let's have a look. We'll list this by market cap. CBA's down slightly. BHP's up, not surprised there. CSL is down, NAB's down, we already knew that. Westpac is also down. So ANZ is the only bank up. There you go. There you go. Macquarie Bank, by the way, is up 2.52%, but they did report last Friday, and I think the results were okay, but nothing too spectacular. Worst performing company in the ASX 20, NAB, ex-dividend, then CSL, no surprise there. And the best performing company, we have the iron ores, BHP and Rio Tinto, although BHP management might be upset with me for saying they are an iron ore because they want to change their perception. They want to change how they are perceived by the world. We're not only an iron ore company, we're into copper and poshite, that sort of thing, but they are still an iron ore company, in my opinion. Not surprised to see Woodside there as well, up 2.4%. Okay, now on to the top losers and top gainers. We'll start off with the top gainers. Now, I was looking for some inspiration, and I found out the top spot in the top gainers by market cap, Manhattan Corporation. So we'll discuss this company when we get to the top 5 stocks of the day. Other than that, not much here. So I went through this quickly, and unless something significantly has changed, nothing much. And Envirosuite's up 20.4% on a takeover bid. So don't usually discuss those unless there's something interesting in it. Top gainers by market cap. Yeah, I don't think there's going to be much here. GQG released funds under management last week. I do think it's undervalued. I should have hopped on board. Share price up 8%. MinRes up 9%. Iron Ore's up. Maybe it's up a little bit too much or too high than it should be. Liontown Resources. So nothing of note, although Findy's up 9.18%. Not sure why Electro Optics is up. So a lot of times you just don't know why a share price of a company could be up, but yet it is. Okay, let's turn attention to the top losers. We already know that pharmaceutical companies did not have a good day, but other than that, nothing much. Pact Group down 14.43%. Not sure what's happening there. I've lost interest in that company. It's sort of infighting going on. They want to delist from the ASX, but then some of the other shareholders do not want to delist. Not sure why the share price is down 14.4%. Let's have a look. Any interesting announcements today? I can't remember. Notice of extraordinary general meeting, but I don't think that would send the share price down. So maybe it's just, who knows? I don't know with Pioneer, or no, not Pioneer, on Pact Group. And that's about it. If we turn attention to the top losers by market cap, we already know Pharmaceuticals. Wouldn't be surprised to see a lot of gold companies here either. Black Cat, Dimerics, probably in that pharmaceutical area. Cogstate, maybe because it's health, so it's down because of pharmaceuticals. Mining, exploring companies, Aveda Medical, maybe the same thing with the pharmaceuticals. Step one, ex-dividend. No, it wouldn't go on ex-dividend. That's looking interesting just for valuation reasons. And then we're getting other health companies, small health companies up, not up, down. I've got my direction all wrong. And that's about it. Okay, let's get to the top 5 stocks of the day. And coming in at number 5, and this is sort of proof that today was fairly light on when it comes to interesting announcements. I was going to choose Vection Technologies, and I didn't really want to give this company any more time. They announced that they secured a 0.5 million AI partnership. Who cares? They did one of the worst couple raisings 2 weeks ago that I've seen, and I didn't want to give this company any more airtime, so I was looking for something else, and I finally found it when I had a look at some of your comments. And Scott just mentioned, interested to see market response to NHF, which is NIB Holdings director's announcement today. The explanation for selling question. And this was interesting to me because I am trading this company, and a lot of times when a director or insider sells out, not sells out completely, but sells shares, is the share price will be going down because the market doesn't like it. But as soon as I put in NHF, I saw the share price was up. So this is the interesting announcement here. Change of director's interest notice. And a lot of times a company will provide information to why a director or an insider is selling some shares. Like, for instance, they're buying a yacht, or they're going through divorce proceedings, or they've got a meth habit, a meth addiction, and they need some money to maintain their addiction, although that would never happen. Never seen that before. I'm just making stuff up. But probably the most common reason directors or insiders sell some shares was given in this particular interest notice. So Mr. Close sold 32,000 shares on market 7th of May to meet a personal income tax obligation. And it does seem like in the past, when this is a reason given, the market tends to be forgiving. A lot of the other times, it doesn't seem to be forgiving. If the market sees a director selling, they will sell because, they know something we don't know. In this case, it's because of income tax. Everyone hates the government. Everyone hates taxes. We understand Mr. Edward Close. And that's why the share price has not been destroyed today. In fact, it's up a little bit. Let's have a look at the chart and why I am trading this company. So NIB Holdings was in a downtrend. We had what do I call it? A trend killer event on the 24th of February, and the share price is now in an uptrend. That's simple. That's why I am now trading NIB Holdings. Simple as that. Okay, coming in, actually 2 companies coming in at number 4. We have Dyno, Nobel, used to be called Intertech Pivot, and I do like their name, by the way. In fact, they included Alfred Nobel, the inventor of dynamite, and this is an explosive company. And I suppose Dyno has something to do with dynamite as well. And the other company coming in number 4 is Ridley Corporation. So notice Ridley Corporation, there is no trading for this company right now. Now, Dyno Nobel released half-year results this morning, and I had a quick look, and I went, ooh, not good. But again, it's all about expectations. There is a possibility that these results beat expectations, but not good numbers in isolation. For instance, profit down from 164 to 88 million. Now, this is XIMI, whatever that is. EBIT down significantly, earnings per share down significantly. Return on invested capital, 6.1%, way too low for me. Interim dividend, 2.4 cents. They are doing a $900 million share buyback, which on-market share buyback, which is excessive because Dyno Nobel has a markup of $5 billion. Am I wrong with that? 5 billion? Yeah, 4.88 billion. And yeah, so that's like a 20% of their capital, which seems excessive, but I think that could be the rules. I don't know. There are some rules about it. Anyway, so they're doing a share buyback. The results don't look that good, but alongside the results, they announced that they are selling or part of their fertilizer business to Ridley Corporation. So let's have a look at Ridley Corporation. A pretty big divestment by Dyno Nobel and acquisition by Ridley Corporation. Ridley Corporation has a markup of $800 million, $900 million maybe, $735.9 million. So this is a pretty big acquisition. Now, you'll hear me sometimes say, the bigger a company gets, the less likely an acquisition will be beneficial for shareholders. So this could be true for this one, but let's have a look at some of the reasoning. So we'll have a look at the acquisition of IPF distribution equity raise. So doing a pretty big equity raising. In fact, I haven't looked at the equity raising just yet. So this is, they're buying the fertilizer distribution business from Dyno Nobel for $300 million with put call options to subsequently acquire its Geelong North Shore property for $75 million. So it's a pretty big acquisition for a company that size. And I did like this bit right there. I'm going to highlight it right now. They use all my favorite words. And I'm being a little bit, what's that word where you don't really mean what you mean? Sarcastic. I'm being a little bit sarcastic when I say they used all my favorite words. They use synergies and EPS accretive. So the acquisition is expected to be 25% earnings per share accretive in financial year 26 on a pro forma basis, including run rate, synergies, 18% pre-synergies. You always see those words used when a company makes an acquisition, EPS accretive and all these synergies. Now, I am quite cynical when it comes to acquisitions and divestment. So in this case, I have no doubt that Dyno Nobel and Ridley Corporation thinks this is a good transaction for their own company. And can that be the case where both companies benefit from divestment and or acquisition? I'm cynical on that. I think there is a case, maybe both companies will benefit, but I don't think so. I don't think really both companies can benefit from this sort of deal. I think what Ridley Corporation is saying, that's being a little bit too ambitious. And whatever reasons Dyno Nobel's saying, I think, yeah, maybe not. So I think there'll be a winner here and a loser. Will there be two winners, two losers? Possibly, but I think more likely there'll be a winner and a loser when it comes to this acquisition. That's all I really want to talk about. Oh, no, the other thing I could talk about is the price of the capital raising. So Ridley Corporation is at 233. I did not have a look at this. So 125 million equity raising, one for 743, 90 million pro rata, accelerated. No. So much things to know here. Anyway, what price? I didn't see any price for the capital raising. Compelling financial returns. So it looks like the debt will increase. Here we go, price. $2.12. There we go, $2.12. So I'd say more than likely the share price will drop maybe between 5 and 10% when they go back to trading, and they'll go back to trading when a placement is completed. I'm assuming they're doing a placement as well. Yeah, an institutional placement of approximately 35 million. So the good thing about this one is the placement is lower than the shareholder capital raising, which I do like. Okay, let's have a look at the chart for both these companies. RIC, which is Ridley Corporation, and is this a high? In fact, if you have a look at the weekly chart, you could actually argue with me that this might be a high quality company. Now, maybe you could argue it's been on a nice run over the last 5 years, but before that, look at that. Between 2001 and 2021, share price just went sideways. Anyway, so not for me. And Intertech Pivot, now called Dyno Nobel, DNL. Let's have a look at the chart. This one, and this is the weekly chart. And is this a high quality company? And this should be an obvious no. And I'll just have a look at the daily chart. Now, the share price of Intertech Pivot or Dyno Nobel had fallen off a cliff recently, and then nice rally. So I'm not sure what happened with this sudden drop in the share price. Before that, the share price looked like it wanted to move into an uptrend. Anyway, so neither company for me, just based off the charts and other things. Okay, company coming in at number 3, we have Vitura Health. Share price only up 2.78%. They did release something I liked. Third quarter business update. Okay, let's talk about this one now. So this company did have a strategic, what do they call it? A strategy reset or something like that. And they did have some aims or goals in regards to this reset. And here it is. It was pretty good there. Company's 4-year financial goals for financial year 25, as detailed in the strategy reset, were to achieve 10% growth in revenue, 3% increase in EBITDA margin. I would assume their margins are fairly low. This company is or has been besotted by competitive pressures over the last few years, and 10% improvement in OPEX efficiency. And it seems like, based off this announcement, they might exceed some of these goals in the fourth quarter. I'm pretty sure that's what they said. Let's go back up. Yeah, so they're progressing in line, and forecast analyzed run rates for the fourth quarter are expected to exceed all 3 metrics. So this seemed like a really good announcement from the company that they're moving in the right direction. In fact, they are outperforming their strategy or their goal. So I thought the share price would maybe rally a little bit more than it has. They also gave some further insight when it comes to revenue. Also, EBITDA margins. They also mention here that they anticipate the EBITDA figure should increase by approximately 20%. That's a nice little increase. So I thought maybe the share price would rally 10, 15% today. It has not, only 2.78%. So let's have a look at the chart and why maybe the share price has not rallied today. Now, if you go back to 2022, share price at one point was above $1. Nice increase in revenue, really rapid increase in revenue, but increased competition. I had to think about that word for a second. Increased competition at that point saw the margins of the company drop significantly. In fact, I had a look at this earlier. And this is their margins, operating margins. Back in 2021, 16.9%. And then it dropped to 3.9% the next year. And that was because of competitive pressures. And they actually stated that in one of their announcements. I can't remember exactly which one. So it looks like maybe things are starting to turn around for this company. So if you go back to the chart, that's why the share price dropped, decreasing margins. So even though I think also the revenue was increasing before that, and the revenue increase sort of leveled off. There wasn't any significant increase in revenue. Now, if we focus what's been happening the last year, last year. So the downtrend was continuing up until about May, June last year. And since then, the share price has been going sideways. We've seen a couple of times when the share price wanted to go on a run. So this was back in October of last year and February this year. You can just see when the share price got to about 12 cents, that run or potential run failed and the share price pulled back, which is sort of understandable because you do have, and will probably still have, quite a few shareholders who bought at high prices who are waiting for the opportunity to sell out of this dog stock. And maybe it is a dog stock. But with the share price going sideways and the share price wanting to go on runs and the company releasing a really, I think, a pretty good announcement, pretty good update. I would not classify this company as high quality, but the share price is at the lower end of its trading range. So I was thinking about this. Could this be a nice little sneaky buy at about 7 cents? Share price 7.3 cents. So maybe I will be thinking about it, particularly if they keep on moving in the right direction. Okay, let's move to company coming in at number 2, Manhattan Corporation. Share price up 41.18%. So I have never heard of this company before. This company is in no relation or has no relationship to Oppenheimer or the Manhattan Project, but they did make an acquisition of a gold and copper project or projects. Now, a lot of times when I do see an acquisition like this, my first thought is this an acquisition of a project or a mine that has been in production in the past? This is not that. In fact, this is a pretty old project, and the last time there was any drilling in this project or at this project was back in 1988, if I remember correctly. See if I remember correctly. Yeah, the project has remained largely dormant since 1988. So it's not quite the acquisition I do look for. I'm looking for small mining companies acquiring projects that have been in production or are close to being in production from bigger mining companies. I do absolutely like those sort of acquisitions. Now, one of the other reasons why the share price might be running on this announcement is they did mention that successful mining and resources industry company director and entrepreneur, Mr. Gavin Resource, I have heard that name before, will join the board as a non-executive director, and Mr. Eric Sonnegaard as technical advisor upon completion of the proposed transaction. So Mr. Gavin Resource recently delivered significant value as a former founding chairman of Vulcan Energy Resources. So maybe one of the reasons why the share price is going to run today is because of, I wouldn't say name dropping, but some of the names now associated with this company. So let's have a look at the chart for Manhattan Corporation. I did have a look at this chart earlier. I just wanted to see if it was interesting. It's not really interesting. Now, they did a share consolidation. It's fairly obvious they did share consolidation back in December. You can just see by the chart here. Actually, shall we confirm that? I could be making the wrong assumption. I am 99% certain they did a share consolidation in December. So let's go back to December. Consolidation completed, 12th of December. There you go. The reason I was pretty confident is you can just see the chart. You can see the share price movement back in November and before then. The share price was going from 2 cents to 4 cents in a day and back and forth. So more than and then the share price after that, you can see it just completely changing. And I would think they did. So a 21, I would say they did a 20-to-1 consolidation. Let's confirm. I tried to do some quick maths in my head. So 20-to-1. Yep, 20-to-1, 20-for-1. And yeah, anyway, I don't want to gloat anymore. Anyway, back to the chart. Would I get excited about this one? No. You can see a bit of selling coming in. Share price got as high as 3.5 cents today, finished at 2.5. I don't like that amount of selling. And it's pretty obvious, for me, it's pretty obvious why there's a bit of selling, because if you go back pre-consolidation, the share price was sort of oscillating between 0.2 and 0.4 cents on a post-consolidation basis. And so a lot of shareholders bought at 4 cents. So 21, which means it would have been oscillating between 0.2 cents and 0.1 cents. So a lot of shareholders would have bought at 0.2 cents, which on a post-consolidation basis is 4 cents. And the share price got to close to 4 cents today. And a lot of these shareholders would be thinking, oh, my loss is not all that much now. And they would have been putting they probably would have been selling on market, putting a little bit of pressure on the share price. Okay, so that's Manhattan Corporation. No interest. Now to the stocks of the day, Pharmaceuticals. It all comes back to a Truth Social post from Trump. It's really interesting because there are some things in this I don't agree with, but there's an absolute truth here that United States people pay way higher prices for medicine and drugs than the rest of the world. But there's reasons behind that. My main thinking about the reasons behind this was it's all to do with profits. It's all to do with profits. Pharmaceutical companies, drug companies, insurance companies, they're all about profits. Anyway, so there's a few things I don't agree with in here. For instance, the pharmaceutical drug companies would say for years that it was research and development costs, and that all of these costs were and would be for no reason whatever borne by the suckers of America. I don't agree with that, and I actually did research that. Anyway, so he's talking about an executive order. One of the most consequential executive orders in our country's history. Prescription drug and pharmaceutical prices will be reduced almost immediately by 30 to 80%. I don't like the next bit. They will rise throughout the world. I don't know if he could say that. Now, yeah, just because you want the prices to drop in America doesn't mean the prices in the rest of the world should rise. I don't absolutely agree with that because, I won't say why, but anyway. The other thing I don't agree with is saving trillions of dollars. Okay, but the question becomes, is this going to happen? Will this happen? How can they enforce this? Now, what I did is I did a little bit of research just to see why drug prices in America are really high. And I found an article, a peer-reviewed article, which is the best type of article, from the European Journal of General Practice, written from or by Els Toril. Why are our medicines so expensive? Spoiler, not for the reasons you are being told, which is really interesting title for an article. I put this into ChatGPT, and it's a really good read. Thank you, ChatGPT. And yeah, so it's nothing, according to this person, this article, nothing to do with research and development. It's all to do with profits. Yeah, it's all to do with profits, that sort of thing. But I hope Trump succeeds in this sort of thing because it's always been something I've thought about. Why are American people always having to pay way more for their drugs? Another thing I should mention, if you ever travel in the United States and watch a bit of TV, you'll notice the amount of pharmaceutical ads on TV. Anyway, so I do recommend having a read of this article. And if you like, going through ChatGPT. I won't go through it in this video. Anyway, so this particular Truth Social post from Trump has sent all these pharmaceutical companies' share prices down. Now, Botanics did release a response to the US pharmaceutical pricing announcement. They also received an ASX price query letter, which I did not realize until right now. Now, in this particular Botanics Pharmaceuticals response, they actually mention in bold that they do not consider that it is likely that it will subject to price reductions based on sales of software outside the USA, as there are none. Yes, there are none. In fact, if what he's saying is true and the rest of the world have to pay higher prices for drugs and stuff, that should be beneficial for Botanics. So I'm not sure why Botanics share price dropped 13%. It does not make sense at all, as they don't sell anything in the United States right now. Or maybe it's just based off the future. Maybe in the future they will pay less price. But anyway, response to ASX price query letter. This is interesting. What's this in regards to? So let's have a look. I'll go to the original ASX announcement. Oh, yeah, it's to do what's happening today. Yeah. So I'm not sure why ASX is wanting to ask questions about this because, yeah, in part 3, they've just mentioned this Truth Social post by Trump. Anyway, so I'll go through this in a bit of finer detail later in the video. Did the other companies, like Telix, receive any price query from the ASX? Nope. Neuron, I'm assuming nope. And what's the other one? Clarity, I'm assuming nope. I'm going to say right now, I think this is an overreaction for the market. And if you have a look at the chart for all these companies, Botanics, yeah, there's not much of a trend there for Botanics, so it doesn't really change anything. Telix, Now, this one might be a little bit different. So with the beautiful uptrend for Telix Pharmaceuticals is now struggling, definitely struggling, but I do think there could be some buying pressure coming in over the next few days for Telix. New Ren, I thought the share price was responding really nicely, potentially moving into an uptrend, so doesn't change that sentiment for me just yet. And Clarity. Yeah, the share price was in a downtrend anyway, and it did rally a little bit, but there's no, and yeah, it's still in a downtrend technically. So my thoughts on Clarity has not changed. By the way, I own all those companies except Botanics. There you go. Now onto one of your comments. Just one. Which one? By the way, Ben Hutchinson says, interesting going to be a Botanics shareholder. What? W-O-T. Okay. Let's go to this one from Paul on Mayo. I don't understand why you hold some of your super positions long term. With your knowledge and skills with technical analysis, wouldn't you be better off adjusting the portfolio? You know what? I've been thinking about that a long time. I've done probably better with my technical analysis portfolio than my long-term portfolio. And I've been thinking, asking myself, why don't I just focus on my technical skills that I'm building and building and building, because I do fairly well. And also, if I have a look at my 3 goals, build my capital, protect my capital, and eventually income, I don't really have to worry about income, but protecting and building my capital, I can do probably better technically. So it's a really valid question that I've been asking myself for probably the last year and a bit. So I'm really thankful that someone has raised these questions, that I probably could do better just by using my technical analysis skills, and I can build on these skills over time. And also, Clinuvel, Domino's Pizza, Minres, Web, and BFG don't look high quality to me. Yes, I sort of agree with some of those. I think Clinuvel, I wouldn't say Clinuvel is high quality, but it has a potential to be a really high quality company on the ASX. And I do think, and the main reason I've not sold that is because of valuation reasons. Domino's Pizza has a potential. I think it's going through a tough time right now, but I think it can turn around. Minres definitely not high quality. I used to own Minres when they were a mining services company, but even then, I've changed my opinion. I don't think mining services companies should be considered high quality just because they're so reliant on the mining cycle. Webjet, used to think Webjet was high quality, and then so the Webjet part, the WebBeds part of the video, or the part of the business, yes, but I just don't think the other part is. But definitely WebBeds is high quality, in my opinion. Really good growth potential. And Bell Financial, that's in that portfolio, or that's in my super. I don't consider that company to be high quality, but I do think it's really good value. It's actually quite cheap at current levels. I'll just show you that. So for instance, Bell Financial Group, and I just don't want to sell because I do think there's some value there. So Bell Financial Group has a P/E ratio of 13.2 and has been growing at a nice rate with a nice dividend yield. So if you have a look at, say, the total returns, like over the last 5 years, it's gone nowhere. If you just do that, Michael, jeez. If you have a look at the last 10 years, return, CAGR of 17.7% per year. And I do think this company has a potential to have those sort of returns over the next 5 years or so. And the other thing I'd like to point out here, over the last 5 years, this company's gone nowhere. And remember 5 years ago, we were at the almost at the bottom, or just coming out of the COVID-19 financial panic. Oh, I lied. This company has a return over the last 5 years of 21.8%. So, and for the very fact that the company has a P/E ratio of 13.2, and I do think this company can continue to grow, I do think there's some value. Clinuvel is a one-product company, really nice growth. For instance, revenue growing at at double-digit rates, earnings per share growing at double-digit rates. A little bit of a slowdown in the growth over the last few years, but it's understandable. P/E ratio is 14.7. Well, this type of growth, yeah, there's no way I'll be selling out of this one. Nice return on equity, return on invested capital, nice margins, 90.8% gross margins, 56% operating margins. So it definitely has a potential to be a high quality company, particularly if they can diversify their revenue streams. And by the way, another reason I would not sell out of this company, if you have a look at the return over the last 5 years for Clinuvel, has it gone backwards? Yes, it's gone backwards. Just want to there it is. There we go. I look at total returns, it's gone backwards. It's negative 13%, which might be controversial when I say this. So over the last 10 years, 12.3% CAGR, might be controversial, but when you see negative returns over a 5-year period, and if a company is high quality, that is suggesting that the company might be cheap. Yes, I've been thinking about this on and off. So in the past, what I've been looking at is nice returns over a 5-year, 10-year period is suggesting nice, maybe you could say and argue it's a high quality company. But if you have a high quality company and over a 5-year period or a 10-year period, that company's given no returns to the shareholders, maybe that is a sign the company is good value and is a good buy. And I'm thinking of Microsoft. Between 2000 and 2014, the share price of that company went nowhere. Very little return, if any return at all. And then all of a sudden, the share price just went bonkers. So there is definitely an argument that Clinuvel is cheap and is a good level, good buying level. So there's no way I'm going to sell Clinuvel at these levels and Bell Financial. The other 3 companies, yeah, I definitely would argue. Minres, again, share price has dropped a lot, so I don't want to sell that. And WebBeds, I think, significant growth over the next 5 to 10 years. And Domino's Pizza, I think they can turn around. But I would have to, yeah, definitely the lowest quality companies in that portfolio. Although Clinuvel, anyway. That's all I have for this daily rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.